Good afternoon, my name is Jordan Lambert, Market Analyst at Gelatama Management. I'm here today with a weekly report. Last week was a bit of a rollercoaster ride for gold. It opened at 1312, it dipped as low as 1272 and then rise back up to 1315 to close. Better than expected Chinese data was a contributing factor to the bounce, and also a growing expectation that the Fed may continue the level of bond buying past its September policy meeting if data doesn't meet its targets. Although the markets are still very much divided over when Bernanke will begin trimming the stimulus, and with every economic release holding so much importance, on the run-up to the eagerly awaited FOMC policy meeting in September, gold has become extra volatile, and it's likely to remain in this state until the markets develop a larger consensus in regards to the timing of the tapering and also how large the first cut will be. There's a lot of market observers expecting a $20 billion cut in monthly asset purchases. Personally, I think it will be a little bit less than that, taking into account the recent soft patch of data, but it'll be interesting to see what the outcome is there. Japanese second quarter GDP was released this morning. It was lower than expected. It came in at 0.6% compared to the first quarter's 1%. So Shinzo Abe, the Prime Minister of Japan, his aggressive policy stance isn't really being as effective as people may have hoped. But this could be good for gold because Japan seemed very determined in trying to revive their economy and achieving this inflation target of 2%. Therefore, we might even ramp up their stimulus efforts, and this could weaken the yen even more, which would be good for gold because gold benefits when major currencies devalue, and the Japanese yen is one of the largest currencies, so that could be supportive for gold. Events to watch out for this week are UK inflation and retail sales data, and also we have the Bank of England policy member votes on the asset purchase facility. Last month the vote unveiled that all members wanted to maintain the level of bond buying, which was congruent and in harmony with new Governor Mark Carney's views. But any surprises with this set of UK data, inflation, retail sales data, or the vote could move gold by rattling the pound-dollar pairing, so be aware of that. On Tuesday we have the German zoo survey and we have US retail sales. Both these numbers could be potentially big impact. Taking into account that Europe has been showing signs of turning the corner, so it'll be interesting to see whether the business managers in the zoo survey agree with this. And retail sales will be closely watched because the Fed now only has about 6 weeks left of analysing fresh data before the eagerly anticipated FOMC policy meeting in September. So every big piece of data like retail sales will be closely watched. On Thursday and Friday, it really is all about the US. We have two regions, manufacturing indexes, we have building permits, and we have consumer sentiment surveys as well. So it's likely, the markets are likely to get more buoyant in the latter stages of the week. Now, let's just take a look at the charts. Bear in mind that this week is likely to be news driven, but it's also good practice to be aware of what's developing on the charts. So we do have a descending triangle developing. It has been broken to the upside, but I'm still going to look at it because I think it's quite important. So we have the bearish trend line here, and then down at about 1270, 1269, we have the support of the descending triangle. So this morning on the open, price actually broke through this bearish trend line, but if we look at the stochastics indicator, we can see that this market on the 4-hour chart is overbought. It's above 80. So I would just be wary of buying this market at present. I know it's broken the trend line, but I would just be wary because it is overbought, and we also have resistance at about 1340. So even if we do get a bit of a rally, it's likely to find resistance at 1340. So if anything, I'll be looking to short this market. Just wait for the right time. Maybe wait for a reversal candlestick to print on the 1 hour, 4 hour, or even 30 minute, 15 minute. And if this coincides with a touch of resistance, that'd be a perfect time to short. More cautious traders maybe want to wait for the stochastics to drop below 80, which gives the sell signal. So you could wait for that if you are more cautious. But yeah, I would just be wary of buying this market. It has been volatile and it has become overbought. So chances are that we are going to see a decline over the next few hours, maybe during the course of the day. But it would be ideal if it did touch resistance at 1340. Right, so thank you very much for listening to me. I'll be with you again tomorrow.